Hello everyone, welcome to RCD ShareNet. This is Ella Huang and I'm here to talk to you about RDSP, Registered Disability Savings Plan again. So last time we talked about the basic of RDSP. So let me do a little bit of the recap, like some of the important points that we want to stress again for the RDSP. So RDSP is a long-term savings plan to help Canadians with disabilities to save for the future. So that is very important because the essence of today's talk is about maximizing your RDSP, and saving for the future is an important point to consider. And then there is a beneficiary, a holder for the RDSP account. They can be the same person or they can be different person. If you are not sure about that, go back to our previous session. It is the first of the series of 3 on RDSP. And RDSP can be built by own contribution, that means the saving you're doing yourself, and also to receive the Canada Disability Savings Grant, which I will call the grant, and also the Canada Disability Savings Bond, which I will call the bond. And of course, hopefully there will be investment income, from your RDSP accounts, and positive one. Okay, now the million-dollar question is, how much to save for the future is enough? I don't think, a lot of people can tell you that. But the general guideline is the more the better, right? The more money you have in your hand is the better. And RDSP could be a good tool to achieve that. Today we're talking about maximizing your RDSP, how to make it going to the maximum capacity, to the fullest as possible. So in an ideal world, when you think about RDSP, we talk about, of course, it is built by your own contribution, the grant, the bond, and the investment incomes. So the last part, the investment income, it will be not included in this talk because I'm not a financial advisor and then I cannot give you any suggestion for your investment. However, in the next session, I probably will be talking a little bit about some situational decision you will make, to make your investment, but not the choices. It's just some general guideline. Okay, coming back to make the most of your RDSP, of course, number one is to maximize your contribution. So remember that although there is no annual limit, but that's a lifetime limit. So I'll talk a little bit about that. So you want to make the maximum annual contribution. Secondly is to get the maximum bond and grant. So they are free money from the government, and it helps to grow the base of your RDSP, and which you can use for investment purpose. Then leave the money in the RDSP as long as possible. So if you put it in, take it out, it doesn't earn you anything. And actually there are some repercussions for that kind of decisions. And get the maximum return on investment. So what does that mean when I put it together in some numbers, and I'll crunch them for you and see whether you can get that easily. So if you contribute per year $1,500, that is the maximum contribution that will trigger the maximum grant and bond. So the maximum grant is $3,500. And if you file your income tax, remember, to get the bond, you actually don't need to put in any contribution, but you need to file your income tax. So with doing that, then it will bring you $1,000 worth of the bond. And provided, the key thing here is the net family income is within the eligible range. So I touched upon the net family income last time, so I want to talk about it again here. So the family income threshold, so what is that amount? The amount actually changes every year. It is indexed. So then you need to check the corresponding tax year, and this is important because that also affects how much grant you will receive, and for some that may be the bond you will receive. But when we consider the family income, if that is for a child, remember a child can be the beneficiary of an RDSP. If the beneficiary is a child, so obviously the child is not working, then the family income is actually the parent's income. So it is the which income, so when the parents file the income tax, and they would have the income to determine the Canada child tax benefits, and that is the income they will use to calculate the bond and the grant. And also if the beneficiary is an adult, then it will be the beneficiary's own income. However, if the person is married, then because we are considering the family net income, not just the individual. So if that's a spouse in the picture, then the spouse income, if the person is working, that it will be also calculated. So that is the family income that we need to know. So the reason I talk about this is now I'm going to talk about different scenarios and situations. So here we have made the assumption that the family income is within the eligible range. So if it is not within the eligible range, of course, then the calculation will be different. So without repeating myself, then we just bear that in mind. Scenario 1, I want to kind of describe a situation, then help you to understand that better, is to maximize the contribution. So for someone who's at age 20 and then opened the RDSP in 2008, so that is the first year the RDSP became available, and then the person has been maximizing the contribution, the grant, and the bonds. So that is the perfect situation. So at 2021, 13 years of contribution. Let us see what the situation looks like now. So the total grants, bonds, contribution, the worth of the RDSP is 13 years times $6,000 per year, so with the maximum contribution, grants, and bonds. And the total will be $78,000. Plus investment income, which I'm not going to include in the discussion, but just bear in mind it might be more than $78,000. So when you look at that, is your own contribution for the 13 years is $19,500, but the value, the worth of the RDSP is 4 times of your own money. It is $78,000. So here, all of a sudden, you put in a certain amount of money, you get 4 times more. And you don't even need to pay interest or anything. You're not borrowing it. That is a grant and a bonds coming from the government. So this is actually the perfect situation. Okay, for someone who opens an RDSP account, but sometimes things, just happens, and then there's no money to contribute. Then what happens? So, like for 1 year, there is no money to contribute. But remember, that is the bond component. So the bond, in order to get it, you don't really need to put in any of your own contribution. But remember, file your income tax. Once you have done that, then you're eligible, then you will receive the bond of $1,000. Of course, no, you have not put in your own contribution, that the grant will not count. So that is very important to realize. So sometimes that may be tight, for your family finances, but don't just think that you are not able to save, because even just opening up the RDSP, you will receive the $1,000 bond every year. So that is a good investment on itself. But saying on that is, sometimes that happens, so it might be unfair to some people. I don't have money to contribute this year, so I don't get the grant, which is a substantial amount for the RDSP. So effective January 2011, the Canadian government has introduced a feature called Carry Forward. And it is actually to assist families who might face such predicament in life that they are not able to contribute for some time, and then they can actually contribute later. And in order to do that is actually they make it possible that you can contribute for the past 10 years. Okay, in order to kind of help you to understand that better, I have a scenario here called Carry Forward. So just say in 2020, that is no money to contribute to the RDSP. So when you have no money to contribute, then the grant money that you are supposed to receive in that year, because you have not contributed anything, so you don't get it. And this is called the unused grant entitlement. So that means, like for 2020, that is an unused grant entitlement of $3,500. And then also room for your own contribution of $1,500. Because, remember, you need to make your own contribution to trigger the grant. So in this case, we're not talking about the bonds because, like assuming that you file your income tax, so you get your $1,000 bond already. Oh, the situation one is, in this year, because last year, no money to put in the RDSP. This year, you have a bit of money to put in the RDSP. Okay, so if you can contribute $3,000, so $1,500 for last year, $1,500 for this year, then you're pretty square off. You get the all the grant portions, for the 2 years. So it's all caught up now. But what happened is this year you cannot come up with double the amount of the contribution. So instead of $3,000, you only have $2,000. So you still want to save, right? Because you have an unused room for own contribution and the unused grant entitlement. So in that case, if you put in the $2,000, now this gets getting a little bit complicated. Let's see whether we can explain that, you can understand it. So the first $1,500 will go for last year, for the 2020, and the $500 remaining, will come to this year, the 2021. So for the last year, 2020, because of the carry forward, then you will receive the $3,500 grant. And then for the $500 you contributed, because of the threefold grant coming from the government, you will get $1,500 for that. And that still remains as a unused grant entitlement, because you have not contributed fully for the 2 years. So for this year, that is still an unused grant entitlement. So that getting it into a bit more complicated if you have not contributed for several years, or you contributed some and then, how to keep track of that. It is, I agree, it's challenging. And there's no way that, when just looking at your RDSP account balance and to work all this out. So luckily, the Canadian government will send out a document called a Statement of Entitlement. So normally this letter will be sent out in the beginning of the calendar year. And then they will, so what does it tell you on this letter, on the statement? It's showing the amount of unused grant entitlement. So they tell you how much unused grant entitlement you have from the previous years. Okay, so when looking at that, then I have this amount of grant that I could claim if I put in my own contribution. That is good to know. As well as the amount of contribution required to maximize your grant. So they will tell you, because remember, your own contribution will trigger the grant. So in order to get the maximum amount of grant, how much money you need to put in as your own contribution to get that maximum grant. So they will also tell you in the statement. So this is good information to know, especially when you have more complex situation, like you put in some money here, there, and though, sometimes it's short of $1,500 and sometimes it's more. So in that case, they will tell you the whole story and give you the profile. And for that, once they, when we put in the money and then when you follow the instruction, you actually don't need to apply for the carry forward. It will be done automatically for you. So, that is also good, and you don't need to fill out any form. And one thing is, when you put in your own contribution, the government will work out the best possible outcome. They will give you the maximum grant possible for it. Sometimes it's very difficult to work it out, like if you have a more complex arrangement. But then, we just believe that, and coming from the government, they will work out the best situation for you. However, it is not just as straightforward as that. Otherwise, I always say planning is required in this, especially for people who have missed multiple years of contribution. So for multiple years carry forward claim, okay, you need to do some planning. And why is that? Because the maximum grant that through the carry forward, actually that is a cap amount. That is a maximum value that they will give out every year, which is actually $10,500 for the grant. So for unused grant entitlement, in 1 year, the maximum that you can claim is actually $10,500, which is equivalent to 3 years unused grant entitlement. If you have, more than that, say for instance, in the past 5 years you didn't put in any of your contribution, now you have some money to put in, then it is no point to put in the whole entire 5 years own contribution, because it won't get the maximum grant entitlement for you. It will only bring you 3 years of the unused grant entitlement. So you want to plan it a little bit so that you, in order to get the maximum, then maybe save the money for next year to get that. So that needs to bear in mind. A lot of times these people think, okay, it doesn't matter, just put it in, and then whatever's over, we leave it for next year. Unfortunately, it doesn't work out like that. So every year is 1 year's consideration. So you need to do some planning with that. So now that is coming to the scenario that what happens if I have more money to contribute? That is a good situation, right? And suddenly, maybe won the lottery or whatever, coming to some money, then you want to put in more. And that is okay, of course, because we say that there's no restriction on the annual contribution. You can put in as much as possible, but that is a lifetime limit for the contribution, which is $200,000. So in lifetime. But for every year, only the own contribution of $1,500 will trigger the grant, because the maximum grant per year is $3,500. If you put in more, they still give you $3,500. To the extreme situation is all of a sudden you want to put in $200,000 at one time. You put it in. So how much grant will you earn? The same, $3,500. That is the grant. Now next year comes. That is no room for your own contribution. Remember, because that is a lifetime limit. Once you reach $200,000, you cannot put in more. So in that case, you will lose all the subsequent grant because you don't have your own contribution to put in. So that is very important to plan. Sometimes you have a lot of money, but it is not good to just put in everything at one go, because you will lose all the chance to get the annual grant. However, sometimes people would choose this method to do that. Let me just explain a little bit on that. Because like the RDSP, it is a vehicle that you can put the money in, and it will not affect. It is not considered as an asset that would affect in some provinces like in BC, that is getting the disability benefits from the provincial government is asset sensitive. They look at how much money you have under your name. When the money is in the RDSP, it is not considered as an asset, so they will not take this into consideration. So for some people to continue receiving the disability benefits, they may want to make the decision to put the additional money into the RDSP. So there are a lot of angles that you need to consider to look at how to make the best use of RDSP, and also to maximize your worth of the RDSP. Okay, sometimes like we talked about earlier, that is a long-term saving. But does that mean that you are not allowed to make withdrawal? That is not true, because you can make withdrawal. But of course, this is not recommended, because the longer you leave the money in there, the higher will be the rate of return for your investment, and also to get the different grants and bonds. Because taking money out in some situation might affect the grant and bonds that the government will take back from your RDSP. So I'm going to talk about this situation. So other than taking money out, there may be other changes that would come to the RDSP. So, that is also important to know as well. So now I want to talk about is the 10-year repayment rule. So 10-year repayment rule is, if you take money, basically, when you take money out from the RDSP, the grant and bond from the preceding 10 years, the government will take back. Okay, so it sounds a little bit harsh, and let me explain a little bit more on that. But that is the basic rule of 10-year repayment rule. Okay, so sometimes it will come to a situation that the individual needs to, terminate the RDSP, or the plan stops being an RDSP, such as they make some investment that it is make the RDSP savings plan ineligible. Okay, so maybe they kind of do some kind of investment, which I'm not sure what they are, but then perhaps you can find out a little bit more. Or when the beneficiary stops being eligible for DTC. So remember, the eligibility to receive DTC is important, is the criteria of opening an RDSP. And what happened? The DTC expires, because that happens to some people. DTC may have an expiration, like 5 years or 10 years, and sometimes there's no expiration. So it depends on the situation. If that is an expiration to the DTC and the beneficiary, or they forget to renew it, to reapply for it, and all of a sudden DTC is no longer valid, that is no DTC. That means the RDSP is no longer valid. So in that case, if this happens, then they have to collapse the RDSP, and then the money needs to come out. So of course your own money goes back to yourself. The investment also goes back to you. However, the grants and bonds may be of different story, and it has to follow the 10-year repayment rule. So if the grants and bonds came into the RDSP in the preceding 10 years, and they need to be returned to the government. So they call it repaid. They need to be repaid to the government. A lot of people is confused by the term when we say repaid. It means they just take it away from you. So those are the extreme cases, but because the DTC situation is getting a little bit more frequent now, and since January 1st, 2014, they put in a provision for people who are facing expiring DTC, that they can actually have an election to extend the period for the DTC, can remain dormant but not closed, and then until they can renew their DTC. So they will provide a 1 year time, and I think during COVID they extended that a bit longer so that the individual can reapply for the DTC, and then within the grace period, then the DTCs are reactivated or reapplied. Then the RDSP can continue. But during the dormant period, there is no grant and bonds coming into the DTC. So the best action will be just look at, is there an expiration for your DTC? If there's such a date, then apply well in advance, at least 6 months in advance, so that that is no gap and that is no discontinuation of that. If at the end the unfortunate outcome is the DTC is not successfully renewed or reapplied, then the RDSP has to be collapsed, and then the money will follow the 10-year repayment rule. So when we're saying of that is no way, every time we take money out from the RDSP, we are penalized, but that is not the case. So remember, the grant and bonds and actually will come up to the age of 49, so then the RDSP. So in next session, we'll talk more about at the end when you start taking money out from the RDSP, when the beneficiary turns 60. So when the beneficiary turns 60, when you look back in the preceding 10 years, there is no bond and grant coming. So that is how the whole program structured with that 10-year repayment rule. But seeing that, the government also see that sometimes people want to make some withdrawal, but not the entire amount, or not the amount that not the government amount, like people say, oh, I only want to withdraw my own contribution. Unfortunately, it is not like that, because, when you look at that, for every dollar taken out from the RDSP, it is the proportion of the mix of the own contribution, the grant, the bond, and the investment profits. So it is not possible just say, oh, I just want to take out my own money. It doesn't work like that. So in 2013, they introduced a new rule. It is called the proportional repayment rule, and it becomes effective in 2014. Okay, so what does that mean is, if you take some money out from the RDSP, so they don't want to penalize you fully, but they also want to get the repayment back because you have taken out your own contribution. So the way they do it is actually, for every dollar of withdrawal of your own money, $3 of any grants and bonds paid into the plan in the preceding 10 years, they will be repaid. So that repay again is the government will take it back. So if you decide to take out $1, they will take out $3 of their money. So, like $4 disappear, you receive $1. Up to a maximum of the assistance holdback amount. So what is the assistance holdback amount? It is equal to the total grant and bond paid into your RDSP in the preceding 10 years. So that is it. So if you look at that, if you have your RDSP for over 10 years, so the money that is not within the preceding 10 years, they are not within the assistance holdback amount. So that is the money that probably would not affect any repayment rule in that sense. But if it is in the past 10 years, it is still, they have the right to take back the grant and the bond. And also minus the grant and bond you have taken out. So it is not to the, whatever amount in the past 10 years minus the amount that you have already taken out. So it's not always the same number we're looking at. You have taken something out, that is the lower amount. So now I want to describe a scenario that is doing the withdrawal before the age 60. So in 2016, opened the RDSP account, they have maximized their contribution and they got maximum grants and bonds. At 2021, so 5 years contribution, grants and bonds. So the whole, the worth of the RDSP is $30,000 plus the investment income. I don't know how much that would be, hopefully more. So in the $30,000, $7,500 is your own contribution and $22,500 is from the grants and bonds. So that means the assistant holdback amount is $22,500. This is the total amount of the grants and bonds. Now, you want to make a withdrawal in 2021 of $1,000. So under the proportional repayment rule, you get your $100,000, you get your $1,000, and the government will take back the $3,000 from the grants and the bonds. So they would take it like that. And that the way they do it is the proportion of the grants and bonds they take out is actually coming from the grants and bonds from the earliest years. So the rule is first in, first out. Okay, so they're not taking the last year, they're going to get the 10 years ago, so the earliest one, first in, first out. So after withdrawal, the RDSP has $26,000 left, plus the investment profit. Okay, so you take out $1,000, so in fact the RDSP has dropped by $4,000. But that is, if that's a need to do that, it's better than lose the entire RDSP. So that is a way that can be, planned a little bit if really you need to do that. And then the grants and bonds repayment, you have received that already. So they are not considered as the unused grant or bond entitlement. Because you have already received them, and then because of the withdrawal, then they are repaid. Then it's already done. You cannot get them back again. It's not like a bank account. You put in, you take out, you put in, you take out, you increase and decrease your balance. It doesn't work like that. Okay, so I hope that is clear with the situation, how you can maximize your RDSP. And that will be one more session on the RDSP. We'll be talking about the newer updates of RDSP and also its implication on the tax and the benefits. And I'll talk a little bit about, like the rollovers and things like that. So I hope you will come and join me again for the next session. For the time being, have a good day. Thank you.